you're having trouble understanding or identifying those order blocks that are going to really work, then this is the video for you. Hey guys, my name is Alex. I'm a full-time Forex trader based in Romania, and in today's video, I want to talk about order blocks. Now, I know this is a very sensitive subject. It is a very saturated subject here on YouTube especially, but hopefully the way in which I'm going to present it to you, which is going to be in a very simple way and also documented from ICT's official work, is going to really shed some light on how to identify this tool that you can use in order to crush the market. So we're looking at gold in here, and I don't know if you've seen my previous social media posts from today, September 29th, but earlier today I took a bearish trade around here on gold. In about 5 minutes it gave me 70 pips, and then I exited the market. The reason why I exited the market is because something was happening over here to the left side of the chart. Okay, and this is exactly what we're going to talk about, because in this area we're going to find our bullish order block. So before getting deeper into explaining what an order block is, I want to show you a PDF that I always come back to in here, and it's okay for me to show this because ICT has already posted his mentorship on YouTube, so it's not like this is a private information anymore. You can see here that he talks about expansion and how the price action signature that we're looking for whenever an expansion has taken place is going to be an order block. Okay, so it says here that an expansion is when price moves quickly from a level of equilibrium, and the thing that we look for in price is going to be the order block that market makers are going to leave at or near the equilibrium. Now, if we move a little lower in here, we're going to see that he provides an example. Let me zoom that in for you so that you can see it better. And in here, in his example, he's basically showing us how to frame that area when price is in equilibrium. So basically, when price is in equilibrium, we will generally see that candles are going to form at around the same area. We're going to have candles opening and closing at around the same area. If you can spot a swing high and a swing low, that price after that for many candles has difficulties in breaching higher or breaching lower, so it's basically not showing any willingness of going significantly higher or lower, that's the moment when you can identify that price is in equilibrium. And we're not talking about big beefy candles, like big bodied candles to be printed, but we're actually talking about very small candles, okay? The kind of candles that you would normally deem as being insignificant. If we will see price expanding either up, either down from that area, and we can identify a bullish order block or a bearish order block forming at or near the equilibrium, so basically the 50% level of this shaded area in here, then that is going to be our bullish order block. And once price reaches into it, we can expect for it to buy. Before we continue, I want to take a few seconds and thank Hanko Trade for sponsoring this video. And I do want to share with you the reason why I've actually decided to switch to Hanko Trade. They have a great variety of accounts, starting with standard accounts, ECN accounts, ECN Plus, and also Islamic accounts. They have a minimum spread. It starts from 0 pips. They have a max leverage of 500, smallest commission in the market, $2 per one standard lot. They have a 100% matching bonus promotion. Click the link below in the description, sign up for an account with Hanko Trade. They have an excellent customer service. Once you deposit at least $100, they are going to match that with a 100% deposit. So now if we go back into the charts, the trade that I take earlier on gold, which was a bearish setup, just to quickly outline the reason why I took it. So we had a break in market structure here with a liquidity grab. So now from this high down into the lowest low. That's my price leg that I'm going to use the fib on in order to identify premium versus discount, price reaching up above into premium area, and then it gives us this nice imbalance to the downside. And once we rebalance that area, we can actually enter. Now, the reason why I decided not to keep my trade open any longer until we would naturally break this low over here is because of something that happened in here to the left side of the chart. Now, I'm going to drop down to the 1 minute, but before doing that, I want to shade that area so that you guys can see exactly what I mean. And let's drop down to the 1 minute. So here on the 1 minute, what we're looking at is going to be small body candles that are going to print, most of them, if not even all of them, opening and closing at around the same area. This level over here is going to be the 50% level of this equilibrium area. So basically, this is the area that I'm looking at to be my equilibrium. Between this swing low and this swing high, we can definitely see that we did not have any, or we did not see any willingness of price of going any higher or any lower. So this is when price is in equilibrium, okay? After this, we see right at equilibrium a bearish candle forming, and then it is turned into a bullish order block by this imbalance that takes place to the upside. So basically, this is the expansion that leaves behind the bullish order block that we're looking for. Okay, so now if we're going to shade only the range of the order block and extend this into the future so that it's going to show on our charts. If we scroll all the way here, my entry was during this candle, and you can see what happened after that M1 bullish order block got hit. That's when I decided to close my trade. I was 70 pips in profit because I was anticipating that it is likely for price to have a bullish reaction from there. The way in which I would have traded this setup, if it would have been happening a little farther away from the end of the New York kill zone. In here, because I've already taken my profit, it made no sense for me to take any trade whatsoever. We can see bearish candle turn into a bullish order block by this imbalance to the upside over here. If we're going to frame this bullish order block and also highlight or outline its mean threshold, which is the 50% level of that bearish candle, which right now became our bullish order block, we can definitely see where our entry would have been. If you got to the point of this video, I want to thank you for watching. If you found my content insightful, make sure to like the comment, subscribe so that the algo can push this video to other people who might need the insightful info in this video. Thank you so much for being here. Make sure to keep it simple. Talk to you next time.